Hello guys, in this video we are going to discuss about fixed and floating interest rate, then front end and back end interest rate, and then annuity. Last video we saw simple interest and compound interest. This video is continuity. In general, there are two rates, fixed rate and then floating rate. Fixed rate means if a borrower takes a loan, for example 10 years, if we take the loan in fixed interest rate, let's assume interest rate is 9%. Whatever may be the market interest rate, may be increase or decrease, he will pay only 9% for the loan period entirely. In case of floating interest rate, he pays interest based on the market interest rate, so it's known as floating interest rate. The advantage and disadvantage of both these interest rate is, for example, a borrower takes fixed interest rate at 9% for 10 years. Okay, for over a period of time, after, let me say, after 2 years, if interest rate reduced in market, in that case fixed rate person will pay same 9%, while floating interest rate person only pays 7%. He will enjoy the benefit. So in this scenario, fixed rate customer bears a loss. In another scenario, let me say the market interest rate raised from 9% to 11%. In this case, fixed rate person will pay only 9%, so he will enjoy that 2% of interest rate, while in floating interest rate customer, he want to pay 11%. So based on scenario, either fixed rate or floating rate may get benefit. Next topic is front end and back end interest rate. In generally, if we disburse a loan, we disburse entire loan amount. The interest and charges will be debited at later period. So it's known as back end interest rate. In another scenario, another case, if while debiting loan, we are taking interest and charges, after that disbursing remaining amount to the customer is known as front end. For example, bank discount a bill discounting is an example of front end. In this bill discounting, for the entire period we will calculate the interest rate, and that interest will be deducted and balance amount is disbursed. Bill discounting topic will be discussed in later videos. Bill discounting, bill of exchange, these are very important topics, will be discussed later. So in this place we are going to discuss only what is by front end and back end. Calculation of interest. So in case of front end, we may calculate interest very easily because that amount is going to be constant over the period. The entire period the amount is constant, so it's very easy to calculate that interest rate. While in case of back end, the interest will be vary. That amount in the account may vary. For example, if a loan amount is 1 lakh, suppose he pays 10,000 after 10 days, after 5 days he pays again 15,000. We want to charge interest only on the daily basis. For that purpose, they gave an illustration how to calculate. On 1/6/2019, balance is 10,000. Next 6th balance is 15,000. So 5 days the balance maintained is 10,000. So number of days maintained 10,000 is 5. Simultaneously, likewise, if we are calculating for everything, we taking number of days. Then we have product means multiplying 10,000 into 5, 50,000. Then 15,000 into 4, 60,000. We multiplying these two columns and we get a product. Then we are adding this all the value, we will get as 4,26,000. If the interest rate is 15%, as we said earlier, 15% means 15 divided by 100, 0.15. So into 0.15 divided by 365. Interest rate is given in per annum. We have to convert it into a daily interest. For that purpose, we are dividing by 365. The answer we get is 175.1. So this is the interest charged over the period 1 to 30. For 1 month, the interest is 175.1 rupees only. They give alternately, but without using this tabular, if we solve normal method, the simplification will be like quite difficult. So anyway, answer going to be same, that interest is charged on daily basis. Annuity, the most important topic. This topic annuity will be come in CAIIB also in ABM. So annuity is a very important topic we using in banking and various accounting areas. What is annuity? Series of fixed payment over a period of time. Let's consider we are going for a rented house. For that, for example, 2 years. So for 2 years, the interest is 10,000 per month. I am paying 10,000 every month for 2 years. Series of payment, that every month 10,000 over a period of time. That means 2 years. Over a period of 2 years, I am going to pay. This is called annuity. So annuity is essentially a series of fixed payment required from you. Either we are paying or we are receiving. It's not we are receiving. It's called annuity. Generally, that payment frequency may be once a year, semi-annually, quarterly, or monthly. Further, the annuity is divided into ordinary annuity and annuity due. Ordinary annuity means that we are making a payment at end of each period. So ordinary, in general, ordinary what we think, we used to pay at end only. Our mindset will be like that only. So we keep in mind that ordinary means at end of each period. In annuity due, payment are required at beginning of each period. So for example, rent. If we want to pay rent at beginning of the every month. Further, there is a new topic, future value and present value. Present and future value we calculating for both ordinary annuity and annuity due. It may be slightly differ. Once we are checking in, once we are go through the book, we make clear in that concept. First, we are going to see about future value of an ordinary annuity. Let's assume every year 1,000 rupees I am going to deposit for 5 years. That interest I am going to get is 5%. Then what is the amount I will get at end of the 5 year? Okay, that this is the illustration. They solve this problem based on two methods. One is concept method and one more thing is formula method. We are going to see both the methods. Future value of ordinary annuity. Let's assume 2022 first year, second, 3, 4, 5 year. 5 year I am going to make an investment of 1,000 rupees. Ordinary annuity means at end of the period. So at end of the year I am going to make the payment. For that, make it clear, I wrote Jan December like this. So 2022 December, at end of the December I am going to make the payment. Sorry, I am going to make an investment. If in 2022, if I am making an investment of December 1000, from December to next December 1 year, and then from year to year 2, and then 3, 4. So only 4 years that 1000 rupees amount will be invested. But while reading question or while looking, we may feel that we have invested for 5 years, but actually for how much period we have invested is only 4 years, because in 2022 we make an investment of end of that year, so this year will be excluded. This formula is as we seen earlier, P into 1 plus R whole power T. Here P is 1000, 1 plus R is 5%, so 5 divided by 100, 0.05 whole power 4. So this one is for investment we made in 2022. In case of 23 means 1, 2, 3. So 3. 24 means 1, 2, 2. In 25 means only 1 year it will be invested 1. 2026 it will be 0, because we are making investment on same period itself. At end of on same day we are withdrawing, so we will make it as 0. Anything per 0 it will be 1. So, while solving this, we will get for this period we are going to get this amount 1215, and then for this one we will get 1157. Likewise, if we simplify these things, we will get an answer 5525.64. Next we are going to see based on formula method. We may have a question like that, what means already we are clear with concept, then why we need to learn the formula method. In exam they may ask the formula in 0.5 mark or 1 mark, like what is the formula for calculating future value of ordinary annuity. They may give 4 formula: future value of ordinary annuity, present value of ordinary annuity, future value of annuity due, present value of annuity due. So in that case we may get confused. So for examination purpose we have to learn formula method also. One more important point is the why we should learn formula method. I will say that point at later in this video. Future value of ordinary annuity equal to, this is the formula, C into open bracket 1 plus I whole power n minus 1 divided by I close. Here C is the cash flow. What is the cash flow? 1000. We are going to make 1000 at every year. Series of fixed payments, so 1000 will be same for everything, so we make 1000. So 1 plus I means interest, so we may use a notation as R or anything else. In book they given as I, so I use the same one I. 5% means 0.05 whole power. How much period we are going to invest? 5. So we have to make power 5 minus 1 divided by 0.05. So don't confuse with concept method and formula method. In concept method we will make like this, like power 4, but in formula method we will put here power 5 only, because they said investing 5 years. What they giving we have to use exactly. This is a slight difference between concept method and formula method. Once we solve this, we will get, if we solve these things means we will get 5.52563, and multiplying we will get this answer. We may think power 5, it will be difficult to calculate this. If in exam we get like this problem, how we are going to solve? We will be lack of time. It is very simple to solve. I will show you how it is. So 1.05 into 1.05 equal to, this is power 2, power 3, power 4, power 5. Okay, then minus 1 divided by 0.05 into 1000. So we got answer 5525.63. So for exam we can use only this calculator only. We should not use scientific calculator. Only basic calculator is allowed. With this calculator we can solve any problem within a minute or less than a minute. So let's check with book whether we solve rightly or not. Okay, we will solve rightly only. So we may see here in concept method 0.64, here 0.63. This is due to the rounding off. That rounding of error is 0.01. For this purpose, this is small calculation, so difference is very much negligent, so we may ignore it. But if you are making a calculation somewhat quite bigger, we may make a rounding of error in practical concept. So they are advising us to use above formula. Not only produce a shortcut, it's not only shortcut but also gives more accurate result. So anyhow, without concept we can't able to solve the problem, or we can't able to use the formula. So we have to read both the concept and formula method, then only we can make it simple. Thank you for watching this video. If anyone not yet subscribed our channel, kindly subscribe, bookmark. Thank you.